The valuation, like everyone's been saying for years, it just doesn't make sense as a car company. It has to be more. It just so happens that this new supercomputer people are pointing to now and saying, whoa, this could be a big thing in the world of AI. This could bring in a revenue stream like AWS for Amazon. When I'm looking at a name like Tesla, I'd either want to buy and hold it forever.
I think this really helps Tesla go from that early adopter phase into kind of more mainstream with this Model 3 Highland. Sporty. It's more aerodynamic. It's got roughly 12% more range. It has ventilated seats, screen in the back. You've got LED lighting on the inside.
Hypothetically, if Tesla was just a car company, could you justify Tesla's current valuation just based on automotive? I'll answer that question, and Ark Invest have some thoughts on the refreshed Model 3. Don't forget, if you guys would like to support the channel and currently watch the continued demise of the legacy automotive industry, head over to Patreon and subscribe on X. There's a lot of stuff I'm covering that I just don't have time for here on YouTube.
Today, let's bring in Joe Teagate, portfolio manager of the Rational Equity Armor Fund. So, all right, believer in the big AI breakthroughs or not of Tesla. Right now, the stock has just been pretty wild regardless. So how do you kind of interpret some of the recent moves, Joe?
Yeah, the valuation, like everyone's been saying for years, it just doesn't make sense as a car company. It has to be more.
Well, I understand the point here. I am actually going to disagree. Don't get me wrong here. I believe the stock market, which, just to be clear, there's no such thing as the stock market. What we really mean by that is the collective buying and selling activity of all participants in the stock market, seems to indicate many investors seem to believe Tesla is more than just a car company. But I really do believe you can justify Tesla's current valuation based on nothing but their automotive business. To be clear, their automotive business is unlike any other automotive manufacturer on the planet. Insane margins, compelling products, costs continuing to plummet, the best tech in the world by miles. I could keep going on. But the reason I believe you can value Tesla just based on automotive and easily justify where they're at today, call it $750 billion, is one, the insane rate of growth. Back in 2014, people laughed at the idea Tesla would ever get to 500,000 vehicles per year, let alone by 2020, which was their publicly stated goal. And spoiler alert, they got there. At the time, many buffoons made fools of themselves by declaring it's not possible because no company's ever grown this fast, and if they did, that'd be an insane rate of growth. It's never happened, it won't happen in the end. It did happen, and it continues to happen. The rate of growth is underappreciated. From this point, as I record this, over the next 10 years, give or take, Tesla is likely to 10x the number of vehicles they're producing. 10x. That's easy to do when you're producing approximately all vehicles per year, but they're already around 2 million per year, aiming for 20 plus million per year. That is a crazy rate of growth. Now, people will argue, but Stephen, the profits are going to come down a lot. Revenues on Tesla's automotive business won't quite scale at the same rate because the average selling price will plummet. However, and this is a point a lot of people just don't seem to get, the actual cost for Tesla to produce a compelling vehicle is going to plummet. I strongly believe that Tesla's gross automotive margin a decade from now will probably be in the 30% range, 30, 35-ish, significantly above where they are today. So even if average selling prices come down, profit per vehicle sold can actually continue to increase as a percentage of the total purchase price. This is an important factor. How much would you pay for a company, a single aspect of their business, just automotive, that could 10x in scale and 10x in overall profits, give or take, over the next decade? Now, 99.69% of the people watching already know I have a Tesla valuation model that people can access on Patreon at the investor supporter level and above. And in that, in my base case, which goes out until 2032, so too does my bull case and the bear case and the hyper bull case. Using those assumptions, I've just asked my calculating bitch, and I say that with the utmost respect, I love you baby, ChatGPT, to do a DCF valuation, some Wall Street wankery to see what does ChatGPT think Tesla's current market cap should be. Its current valuation based just on the automotive business from my base case assumptions out over the next decade. No FSD, no software, literally just selling vehicles. I'll cut to the chase on screen now. $906 billion, less than Tesla's currently valued at, just based on the automotive business, which, for the record, is a tiny speck relative to all of the other aspects of Tesla's business. Now, I'm not a fan of DCF. It's a great way to miss the bigger picture. However, even based on Wall Street conventions, but using my assumptions for Tesla's automotive business in the base case, Tesla today, just based on automotive, already almost a $1 trillion company. No doubt most folks on Wall Street, if they saw the assumptions I have in my base case valuation for Tesla out over the next decade, they'd laugh. Of course, the joke's going to be on them. But what most of these very intelligent people fail to understand is the following. As I posted on X a couple of days ago, just let this sink in, ladies and gentlemen, visually right now. We're looking at battery electric vehicle sales over time. In green, you can ignore the other shit. Notice a trend. Yeah. The limiting factor for EV adoption is not demand. It's affordability. If you make compelling EVs affordable, demand is quasi-infinite. And increasing affordability is inevitable as production scales up globally, manufacturing innovation occurs, and battery costs decline. As I've said 1 trillion times at least, EVs are a commercial inevitability. Now, some clarification. In terms of increasing affordability being inevitable, Tesla is a major forcing function for increasing affordability. If other companies cannot drive down costs at a comparable pace, they will not remain solvent. The reason I mention this is because practically everyone who looks at Tesla and their automotive business is underestimating these important facts. They assume that EV adoption is going to be much slower than it will. They assume that EV costs will not come down at all, or if they do, it'll be very slow. They don't understand exponential growth. They don't understand disruption. Again, last time Morgan Stanley publicly published their estimates, they believe just 1/4 of all new vehicles sold in 2030 in the United States would be electric. 1/4. Some of the more bullish estimates from the forecasting agencies today are for approximately 1/3 of all new vehicles sold on Earth in 2030 being electric. The other 2/3, and in some cases 3/4 or more, not electric. And this is why, even based on just Tesla's automotive business, everyone is underestimating it. But of course, as I mentioned, Tesla's automotive business is a drop in the bucket compared to everything else. In other words, based on my assumptions, which of course they could be wrong, in fact they will be, it's just how wrong will they be? Every other aspect of Tesla's business, autonomy, the robo-taxis, humanoid robot, energy storage business, Dojo as a service, I could keep going. All of that is free right now based on Tesla's current valuation. And just to be clear, because there will be some doofus who says it, I know it's coming. When I talk about demand not being the issue, affordability being the issue, I am using the dictionary definition of demand, not the Wall Street genius definition. Demand. The desire of consumers, clients, employers, etc. for a particular commodity, service, or other item. Desire. Keyword here, desire. Approximately 100% of the children on planet Earth today desire a Tesla. Many adults do as well. They can't afford one. They're concerned about interest rates. They still want one. If they could buy one for $1,000, they would. It is important to understand. This is why I talk about affordability being the limiting factor. If you can make a compelling electric vehicle, spoiler alert, that's what Tesla does, affordable to consumers who want one, desire one, but can't quite afford one, they will buy it. This is why I say demand is quasi-infinite. You just need to deal with the affordability barrier. When you hear folks on Wall Street saying there's a demand issue, Tesla has to cut prices, that's proof there's no demand or there's a demand issue. No, what they're really saying is there's an affordability issue. And to be clear, just because you make something affordable does not mean you can sell a near infinite number of these things. They must be equally desirable. This is why I use the term compelling electric vehicle. Make a pile of shit. Doesn't matter how cheap it is, most people aren't going to buy it. But if it's really good and offers a huge amount of value and they can afford it, you'll sell as many as you can make. This is Tesla's plan. Now stay tuned, because in just a moment we're going to get to Ark Invest sharing their thoughts on a much more compelling, even more affordable, more profitable vehicle from Tesla. Shout out to the Model 3 refresh. First, we'll let this guy pick back up where he left off.
That's been the case for a long time. Now, you go back to 2021, Tesla was $414 at the end of the year. And there's lots of possibilities out there. People weren't really sure what they were banking on. Tesla's, innovating in a lot of different ways. There's maybe the home appliance type of battery thing that they got going. There's a whole other skew of different, slate of different things they're doing in R&D. It just so happens that this new supercomputer people are pointing to now and saying, whoa, this could be a big thing in the world of AI. This could bring in a revenue stream like AWS for Amazon.
I just can't get over this. Now, it's true. The reason I'm laughing isn't because this is ridiculous. It's because I've literally been saying this, and many others have as well, on YouTube and X, since Dojo was first announced. I cannot count the number of times I've literally used the example of Amazon Web Services to compare what Dojo as a service will do for Tesla. Solve their own need, then make this a product for other people. Saying this for literal years now. But it took Morgan Stanley publishing a research note explaining this before anyone outside of this little YouTube and X bubble started saying the same thing. Welcome to 2021, ladies and gentlemen.
And now people are looking at it again. Oh, maybe this is a tech company, not a car company. And even as a tech company, the valuation is still really high. Just put that caveat out there. But if people were paying $414 in December of 2021, I think it makes sense that people will look at that level again. If this supercomputer is what they say, if people are saying, hey, they're going to have new revenue streams down the line, I want to get in before this really blows up to what it can really be.
Okay. So it's trying to push. I mean, we generally still have the lower highs stretching back to the Tesla record in late 2021. But at 268, we're pushing back into the high end of the range from earlier this summer. What do you think is possible here technically? I mean, would it be a big deal if we started trading at 280 plus, maybe like 300 plus? That'd be a higher high on the chart.
It'd be a higher high, and I think it'd be a catalyst all the way back up to that all-time high. But at the same time, it's very risky. You see the moves that Tesla has. It was just 220 like a week ago. So, yes, $50 move to the upside just like that. And then it could go back to 220 in a heartbeat, too. So that's why, for me, when I'm looking at a name like Tesla, I'd either want to buy and hold it forever.
Somebody say buy and hold Tesla stock forever? Well, that is literally my plan. I haven't sold any stock. I've been buying now for about 8 years, and my plan is literally buy, borrow, die. Hopefully with a very large gap between the latter two words. Really, by the way, this is my plan. I plan to borrow against my Tesla stonk, capitalize the interest on those borrowings, and when I eventually kick the can, some of my assets will be sold, clear out all the debt I've accumulated, and then there'll still be a shitload left over for doing some good in the world. Oh, and rest in peace to my progeny, who will not be getting shit. By the way, I did just use the word progeny. And now, as promised, Ark Invest have some thoughts on Tesla's refreshed Model 3, the next step in their continuing master plan to drive the cost of their vehicles down while simultaneously making them even better value. And remember, value is not price, value is not cost, it's what you get for what you pay.
Tesla Model 3 Highland, long anticipated, finally revealed, kind of in an interesting way. Some images were leaked and then more noise on Twitter, and then boom, updates on websites, and we saw it come out. Maybe we'll flash a picture here as well so people can see it. It looks pretty good, sporty. It's more aerodynamic. It's got roughly 12% more range than the previous versions.
So recapping so far, it's better, and better. Let's continue.
It has ventilated seats. It's got a screen in the back so those back passengers can watch cool stuff and control air through there. They've got LED lighting on the inside, which can be adjusted. So overall, just all, I'd say, incremental but important improvements here. And I think the real thing to highlight here, simultaneously, there was a price decrease on the S and X by a fair amount. And so I think those prices have come down quite dramatically since the start of the year. Roughly, I think it was in the 20 to 30% range.
So what sucks hard? A vacuum. You know what else sucks hard? Oh wait, I forgot what her name was. You know what else sucks hard? Being Tesla's so-called competition. What Tesla is essentially doing right now is shifting expectations for entire vehicle categories by price point. What the S and X once were was six-figure vehicles competing with the likes of BMW, Mercedes, and Audi. Those same vehicles now are significantly better than the early models. Better performance, more range, more features, better tech. I mean, you can literally fucking play Elden Ring in the new Model S and X. Yet the price point of those vehicles has shifted down an entire category, massively expanding the total addressable market. No one was able to compete with Tesla in terms of the price point and features at that higher price range. And now it's over. The Model S and X now are approximately the same price point with comparable features to the early Model 3. They're shifting the whole vehicle category and price point down a rung. The Model 3 and Y now are almost at a mass market price point. Tesla's next generation vehicle is going to be another jump, but they're not going to stop. These price points and categories are going to keep driving them lower and lower and lower. By the end of this decade, it's extremely likely that you'll be able to buy a very compelling Tesla comparable to today's Model 3 and Model Y. Yes, the refreshed Model 3 for about 20 grand, maybe less. This is their strategy. They're not complacent. They're not standing still. They're not going to sit and milk profits just for the sake of it. They are forcing the entire industry to follow or perish. Refer to my earlier post on X. If you can make these products more compelling, better features, etc., and more affordable, demand is quasi-infinite. The refreshed Model 3, for example, now has a rear screen. You know what else has a rear screen? The Model S and X. And costs chump change by comparison. As I've mentioned, in Australia right now, currency converted, the new refreshed Model 3 is less than $40,000. This is insane. You've got to ship them from China. That's expensive. And Tesla's still making a good margin on them as well. Under $40,000 for the refreshed Model 3. Better, more range, heated seats. Everything is better and it's cheaper. Now, obviously, there'll be temporary fluctuations in price up and down, but the trend will continue to be lower for prices, while features will continue to improve. This is disruption in a nutshell. Again, one of the core parts of my thesis in terms of Tesla's automotive business and why they can easily scale to 20 million vehicles per year and still maintain ridiculous profits, and why even today, just based on automotive, Tesla's market cap, in my opinion, well, actually, in the opinion of ChatGPT, is below what it's intrinsically worth.
But the point I want to use to highlight here is what disruption looks like along competitive vectors. And so when Tesla first came out, the classic refrain was, oh, look at those panel gaps. It's terrible. Like, I would never buy a car like this. The Spartan interior, all of that. But Tesla was competing somewhat orthogonally. It was a better driving experience. The software was far better than what would be in a traditional car. And that was enough to kind of gain these early adopters who came in and, they're buying the car for a different reason. Who cares? The panel gaps are off, but the software is pristine and constantly improving. And now with this update, you see Tesla making some of these incremental improvements that make the interior better, right? You have those ventilated seats. You got that back screen. It's quieter. You got the LED lighting now. And so you have the traditional automakers who fell back on, oh, the interior quality is so much better. And now that competitive vector is diminishing as well. And I think this really helps Tesla go from that early adopter phase into kind of more mainstream with this Model 3 Highland. And I don't know, Nick, you're a Tesla owner. What do you think?
Well, I have one question, which is why do you think Tesla chose to refresh the Model 3 and not some of its other models? Is there a specific reason that you think they're, looking at the Model 3 and saying, let's improve on this one where, it has S, X, Y out there? Why not go after one of those first?
Yeah, so I think S and X, those have been, S, you just had Plaid. X was refreshed not terribly long ago and is much smaller volume, higher end. Y is, I think, the first half this year, the best-selling car in the world. And so, that kind of leaves the 3 as the one to improve. I think it probably got overshadowed with the Y.
This is correct. Very obvious. I'm sure you all know the Model S and X recently had a refresh, the Plaid version. They now have a PS5 quality gaming console built into the car. As I mentioned, you can play Elden Ring. What the f***? Insane performance, but they are low volume vehicles. This is where Tesla debuts technology. And again, I don't think it will happen. It might. But Tesla could delete the S and X and it wouldn't f***ing make a difference. I first began saying this a while ago and months later, guess what happened? Tesla deleted the right-hand drive Model S and X. You can't buy them in Australia or anywhere else in the world now. If it's a right-hand drive country, you just can't do it. Tesla deleted the complexity because it's such a low volume vehicle. The right-hand drive version of the S and X is a subset of all S and X, which is a tiny spec. And I'll tell you what, the refreshed Model 3 isn't that far away from the Model S. Now, obviously, the performance is not quite there, the range is not quite there, the features are not quite there, but they're getting close. If Tesla does end up deleting the S and X at some point in the future, and the Model 3 and Y become the flagship products where they debut new tech, don't be surprised. But back to the point. S and X relatively recently refreshed. Low volume vehicles anyway. The Model Y, literally the world's best selling vehicle, came out a few years after 3. Model 3 was the obvious low hanging fruit for a refresh. But you know what's going to happen next? A refreshed Model Y. Give or take maybe 24 months, could be less, could be more, just pulling that out of my ass. But it's inevitable at some point. Tesla will also take the opportunity to refresh the Y, and yes, it will end up with the same features as the refresh 3, including the rear screen, a bunch of other stuff. But it's selling so well right now, why even bother? By the time that happens, Cybertruck deliveries will have commenced a long time ago. It'll be likely that Tesla's ramping production, at least early on, with their $25,000 vehicle. Subsequent to that, there'll be the robo-taxis, and then it is game over. At some point, of course, the Tesla van will happen as well.
And in my mind, it's like the Honda Accord. I'm biased. I drove a Honda Accord, but it's like that's a classic sedan. And now the Model 3 is, I think, goes head to head and competes, far more favorably than the Honda Accord now with these updates. It's electric. The range on the long range, I think, is close to 370. The other thing I didn't note, this is just in Europe and China for now, so we'll be waiting to see when it comes to the US. But I do think it's that reason. The other two high end or low volume, Model Y is selling like hotcakes. So this one was the one that kind of needed this bump to find its sweet spot.
And do you think this will improve the margin structure of the Model 3? Have there been any notes, details about, they've improved on the factory build and, this could actually improve the margin and cost structure of the vehicle itself?
I would imagine that is the case.
Obvious things are obvious. We heard, obviously, Tesla had informed the reviewers of the refreshed Model 3 repeatedly. 50% of the parts have changed. Well, guess what? It doesn't look 50% different. Certainly it's improved, but most of the changes will have been internal. Why would Tesla do that? To make it better and cheaper. There'll be a lot of manufacturing innovations. We saw the taillights now, one thing rather than two pieces, just a lot of simplification. And to be clear, the innovation won't stop. As we've seen with every Tesla vehicle, they're constantly improving mid-cycle, making changes, deleting parts and processes. So don't think this is the final form of the new Model 3. It's just the very first version. Again, I know I'm getting repetitive, but it's important. Tesla's plan is simple, not easy, but simple. Make their products better and cheaper and win, which they're doing.
Obviously, you don't want to look too short term as they're ramping new production of the Highland. If you consider that I think it's all LFP, which is a lower cost battery chemistry, and the updates, Tesla's constantly improving costs on the manufacturing side. I do think this is a move towards more margin for the Model 3. And then I one of the other things that I want to highlight, I tweeted this out actually, was, for so long the question was, is it easier for Tesla to ramp manufacturing or for traditional automakers to shift to electric vehicles? Time has shown Tesla's ramped manufacturing and demonstrated manufacturing prowess to a greater extent than traditional autos have been able to switch over to electric vehicles. And yet when I tweeted this, apparently this is still open for debate, and a lot of people don't necessarily agree with this.
Well, as we know, the intelligence bell curve is real, and there are plenty of DMFs out there on one far end willing to share their opinions confidently, even though they are completely wrong. And Sam's point is a very important one. The crux of what he was getting at there is, can Tesla, by the way, the answer is yes, increase their EV volumes, their EV production, the number of electric vehicles they're producing per year at a faster rate than a legacy automotive company can? The answer, yes, meaning Tesla's running away with it. Even if a company like Government Motors or Ford or Volkswagen or Toyota or Hyundai, name them, is trying to produce as many electric vehicles as they possibly can, as fast as they can, Tesla, while they're trying to produce X amount, will be producing many times more than X. This matters.
But so it is interesting to kind of step back and look at that just broad framing there.
Yeah, I mean, it is, I think, interesting. I've, from hearing you, Tasha, the whole team talk about how Elon approaches the business in general, he's come out and said, right, the factory is the product, right? We're in the business of building factories from a first principles perspective. And I've always found that to be quite enlightening in how he looks at the products they build.
Speaking of the machine that builds the machine, don't forget about Giga Mexico. And it won't be the last time we hear about a new factory from Tesla. Expect a couple more of announcements in the next, well, you just have to head over to Patreon and look at my valuation model for exactly when those will be announced. Won't be long. So to recap, even if Tesla was just a car company, the stock still looks like a bargain. But as we know, Tesla's automotive revenues over the long term are going to be an absolute speck compared to everything else. Let that sink in. Imagine buying Tesla today and getting everything other than the automotive business for free. FSD, robotaxis, humanoid robot, energy business, Dojo as a service, battery business, supercharging, and who knows what else could happen in the future. Someone say HVAC. And as we see with Tesla's refreshed Model 3, they are single-handedly forcing the entire industry to make incredible, compelling, exceptional value vehicles or go bankrupt. Although as I've been covering recently in my exclusive videos on both X and Patreon, it ain't just Tesla that's going to force automotive companies to go belly up. The UAW are currently doing their absolute best to destroy General Motors, Ford, and Stellantis. I cannot believe what we're currently witnessing. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1 shit, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it. You'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, Time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.